Is Starbucks stock a good buy at current levels? Are the super investors buying the stock, and what are the latest business results and fundamentals? Stay tuned to find out this and a lot of other important information. As always set with educational purposes and is not meant to be taken as financial advice. Let's first start with some general market analysis to see the future perspective of the coffee industry. According to Global View Research, the global roasted coffee market size was valued at about $42 billion in 2022, and it is expected to register a compounded annual growth rate, or CAGR, of 5.7% from 2023 to 2030. A significant increase in the consumption of coffee by all age groups has been seen due to the association of health benefits, such as lowering the chance of diabetes, reducing the chance of getting Alzheimer's and Parkinson's, preventing heart failure, aiding in good health of the liver and stomach, and others. Moreover, the growing preference for coffee over other beverages amongst Gen Zs and millennials in emerging countries is further driving the market growth over the forecasted period. The US market is by far the biggest for all roasted coffee makers. It is expected to grow by 6% per year as shown on the provided chart below. The share between the two main types of coffee, Arabica and Robusta, will stay pretty much the same. The main differences between them are their state and where they are grown. When it comes to their difference in caffeine levels, Robusta beans contain twice the level of caffeine than Arabica beans. Arabica beans have a milder, more aromatic taste, while Robusta beans hold a stronger, more acquired flavor. The overall growth of the industry is not huge, and this is due to the maturity of the business. Coffee has been around for hundreds of years. When it comes to the market share, Starbucks is a clear leader. According to Statista, they operate 15,300 locations, while the second place goes to Dunkin' with about 9,000 stores, and Tim Hortons is on spot 3 with 630. This data is for the US alone. When it comes to super investors, according to Dataroma, from all of the 78 biggest investors that are tracked, there are 9 of them that own Starbucks, which makes the company the 33rd most shared investment between these ultra-rich investors. The latest business results for the company came out in late January, and now I'll go through the most important information. The North America and US comparable store sales increased by 11%, while international comparable store sales decreased by 5%. The company opened 763 new stores in Q4, ending the period with 711,000 stores globally. 51% of them are company-operated and 49% are licensed. At the end of Q4, stores in the US and China comprised 61% of the company's global portfolio, with about 16,000 stores in the US and 6,000 stores in China. For the full year of 2022, the results are as follows. North America comparable store sales increased by 12%. The US comparable store sales alone increased by 12%, while international comparable sales decreased by 9% for the full year, while China's comparable store sales decreased by 24%. For China, this is mainly due to the severe lockdowns throughout most of 2022. This decreased the consumption of coffee for Starbucks stores. When it comes to percentage of revenue, North America takes a 73% share, while the international segment, which includes China and the rest of the world, is only at a 21% share. While the overall year-on-year revenue growth is 11%, which is by far not bad. while the total global store count was up by 6%, totaling 35,000 stores. We must remember that as investors, we always invest in for the future, not the past. So this is why it's good if we see the expected results for 2023. The total revenue or global revenue, as it is said here, is expected to again increase by 10 to 12%, while the biggest growth in new stores will come from China. Now that we have discussed the industry specifics and the latest business results of Starbucks, let's check up on the fundamentals. The current price to earnings of Starbucks is a massive 38. The company has a long history of trading at around 18 to 22, which opens up the potential risk of a 50% collapse in the valuation if we go to the same market sentiment levels, which is very likely as the global liquidity is drying up due to central bank tightening efforts. So from a historic valuation perspective, Starbucks is definitely too high of a price for me. Another key risk fundamental driver is the debt management levels. For Starbucks, the debt management is not very good as they have a negative equity, meaning the assets are lower than the liabilities. This for me as a true value investor is unacceptable. This makes the return on equity a negative number, and according to Buffett, this needs to be above a 12% in order for the business efficiency to be considered okay-ish. From a moat perspective, I do for sure identify a certain competitive moat and a competitive moat in the eyes of Starbucks, but it is not the same as the moat I see in companies like Yum Brands or McDonald's, for example, which could be categorized in the same space. Make sure to watch my McDonald's analysis video here on the channel. All in all, I think Starbucks has a way too high current valuation and the debt management is not done correctly for my investment preferences. Subscribe to the channel and comment down below which other stocks you want me to cover next here. Goodbye for now and until the following video.